government, and on that basis, Mr. Speaker, I commend this bill to the House. Thank you.
Dr. David Clark.
Well, Mr. Speaker, after that brief contribution from the member, less than 2 minutes, Paul Goldsmith, we call him less than 2 minutes, Paul Goldsmith. I hear others do too. Where he failed, I'm afraid, to address the issue of why 10% should be the right number, why the international interests should be protected at that level when overseas jurisdictions protect at a lower level. It is. I mean, it's a little surprising. Mr. Goldsmith is normally at least technically well versed in these things, although his slightly jaundiced view of the world sees the kinds of Thatcherite policies he prefers often put forward. My colleague reminds me he wrote John Banks's biographies. He's wondering whether there'll be a sequel. But normally Mr. Goldsmith is well versed in the actual technicalities of the issue and will put forward an argument, at least, in defence of a position. And I guess it's a bit disappointing to the House that he's not even prepared to defend the legislation here. He is simply willing to see it go through. He says that the Labour Party's supporting it, which we are, because we need some regulatory framework. But we've already drawn attention to the inadequacy in that respect, and it's a shame that the government won't even articulate, and maybe it's lost faith in its own view about where that line should be drawn. And that is symptomatic, perhaps, of a government that's out of touch. Just get it done, get it in place. But it is a long way down the track. We're passing it under urgency. We have had 2 years, Mr. Speaker, of unregulated bond issue. There's been no regulation covering financial bonds. In fact, it may be longer now. And there's been no oversight or regulation. There's been a very tardy response, as you've heard, not well articulated as to why the line's been drawn where it has been drawn, and why it should be higher here in protecting international interests and big business over small business interests, those who risk their shirt every day, in terms of putting their own shoulder to the wheel, mortgaging their own houses and so on. No argument's been put forward by Mr. Goldsmith on that front. And this is typical of this government. It's 5 years since the global financial crisis, and we've had 5 long years of this government which has been very tardy to address issues in the financial sector, and certainly where they protect small investors and small lenders. It seems not to be a priority for them at all. In fact, on that side of the House, they seem to have rather a negative view towards small business people. They much rather protect the interests of capital, the vested interests, those who already have the money, the 1%, the people that are their financial backers. And it's a real shame that they are not interested in the broader prosperity of New Zealanders and the opportunities that are presented for New Zealand's future, and having every New Zealander succeeding, having a country where all can live in dignity and make their best contribution. But that's the National Party, and New Zealanders are getting a little tired of them, and I expect that will be reflected in the next election. When a government gets out of touch, when it's been here too long, the voters start to turn off and they start to ask, what is the alternative? And we're certainly hearing that around the country. This lack of oversight of the covered bond market is indicative, as I've said, of a government that's got its eye off the ball and is in no particular hurry to protect the small business people of New Zealand. This approach is already in place in the UK and Australia and Canada, other jurisdictions, has been in place for a long time. Opposing this legislation, if we were to do that on that detail, would only see further delays. And that's the point I'd make to Mr. Goldsmith, who seems strangely silent now. He's not responding in any way. In fact, he's almost invisible in this debate right now, I would suggest, Mr. Speaker. Mr. Speaker, this lack of regulation, is paralleled in other areas, and it is unfortunate for New Zealand. The Crown Retail Deposit Guarantee Scheme was another one designed to protect a run on banks, designed to make sure that those creditors didn't pull out, that we had secured lending for the country. And it's estimated that $500 million of taxpayers' money was lost as a result of the Crown Retail Deposit Guarantee Scheme, and this government has failed absolutely failed to investigate it. It failed to have an oversight of that lending scheme, and the likes of South Canterbury Finance and others have collapsed because of dodgy lending, and likewise other finance companies increased their loan books with dodgy loans up to 10% because it was Crown guaranteed. That's taxpayers' money that has been handed over to those lending companies, that has been handed over willy-nilly by a government that failed to observe what was going on, and when it signed a blank cheque, gave it out to those companies and said, we will guarantee all of your lending. Of course, many people invested, but particularly those with interests that were not necessarily straightforward. Many ordinary New Zealanders invested their savings, got caught up and got hurt, and taxpayers, as I say, have footed the bill for all of it. And this government has steadfastly refused to investigate, and that's typical of the lack of oversight that we see here in this legislation, the lack of willingness to regulate in favour of the mum and dad depositors, to look out for the interests of those who mortgage their own houses to contribute to our economy. And we saw that with the Mainzeal collapse. The large firms, they got out okay, but the subcontractors couldn't even get their tools off the building site. And that's why I think the proposals put forward by my colleague Clayton Gosgrove, the excellent proposals he's consulted on around making sure that subcontractors get their dues when they're contributing to projects in New Zealand, well worth thinking about, well worth debating. I don't expect we'll see much progress from this government, which seems very disinterested in small business and the little guy who works to get ahead, or the woman or man who risks their own house in order to get ahead. $6 billion worth of bonds, Mr. Speaker, have been issued over 2 years without any regulatory oversight. And so it is good that this is finally being addressed by this government, albeit it's been done in a fairly tardy fashion. The point that Mr Goldsmith didn't address was why these big lenders should be protected at a rate of 10%, why 10% of a bank's assets are being run in this way, as opposed to 4% in Canada or 8% in Australia. The arguments were not strong in Select Committee in favour of having a bigger protection for the big end of town in New Zealand than in those other countries. The FEC chair, Paul Goldsmith, was content to let that slide through. Mr Goldsmith, subsequently the chair, there was another chair at the time, he's now the chair of the committee, and again, very silent on the issue. As I look across the House, I see no response, not even a glimmer in his eye can I see across the House, Mr Speaker. He's a glazed look. I can't see it now. I can't even make eye contact with the man. He's absorbed in other things, probably a little bit ashamed of the legislation in its current form. But there we are. The three elements of the legislation: a requirement that covered bonds issued by New Zealand banks be registered, subject to meeting registration requirements. It's a sensible step. We can see what's going on. We can make sure they're not exceeding the limit, even though it is rather high. The fact that there will be independent monitoring of covered pools by an asset monitor makes sense, and provisions to amend the Act to clarify the treatment of registered covered bonds in the event of issuer insolvency all make sense as measures in terms of the framework that's been set up. So, Mr Speaker, we will be supporting the legislation. We've noted our concerns, our reservations about the level of covered bonds in New Zealand as opposed to those overseas jurisdictions which seem more interested in growing new businesses and supporting entrepreneurs than in supporting vested capital interests. But that's the National Party. They are there for the 1% to protect the capital interests of some of their mates. Even the big corporate interests aren't safe. It's only the ones that have got the Prime Minister's ear, it seems. We saw that with the casino deal. We've seen that with Bill English, with Rio Tinto. No doubt we'll see that with Chorus. It's only the ones that have the immediate ear of the leaders of the National Party that seem to be able to get the handouts as and when they wish for them. Not all big business seems to get the fair treatment. It's only some that are close to the National Party. And that's something New Zealanders are growing increasingly tired of, something I hear over and over again in my electorate. New Zealanders are getting sick of a government that does everything by deals, that is not prepared to regulate in good time markets in order to make sure that they're acting in the wider New Zealand interest. This is one of those examples here. We're glad they've finally come round regulating this sector, albeit in a kind of slightly haphazard way. They're not prepared to defend, but it is good. This is a government that's got a terrible record on unemployment much higher than when it took office. Real wages.
Sorry to interrupt the honourable member.
They have much work to do.
I call Dr. Russell Norman.